Hi, it's Lee and welcome to the Tesla Economist. A lot of Tesla investors are pricing in 2 million deliveries for 2023. This is due to the fact that Elon said on the earnings call that 2 million was possible, if nothing really goes wrong. Let's review just how possible 2 million deliveries might be and what it would take in order for Tesla to reach that milestone. In 2022, Tesla delivered 1.31 million vehicles. If Tesla hit 2 million, then that would be a growth rate increase of 53%. Which doesn't sound too extreme. We've come to expect 50% annual growth for Tesla. According to Elon, demand is the highest it's ever been due to all the price cuts that have taken place, and that even if Tesla do produce 2 million this year, they will also sell every vehicle. Yet despite such extreme price cuts, about an average of 20% across all markets, Tesla are still able to generate good gross margins that we're told are going to still be in excess of 20%. Excluding regulatory credits. Then, on top of that, we're told that gross margins are not even the margins that are the most important. It's all about operating margin, something that I've also explained at length. The difference between gross margin and operating margin is the operating expenses that Tesla incur. Tesla have done an outstanding job in getting their OPEX as low as it is. But not only that, it doesn't seem to increase very much as Tesla's production increases. In other words, we have two forces working in opposite directions here. As Tesla increase their supply, they need to reduce prices in order to find the new demand for the additional supply. But as OPEX remains a relatively fixed cost, it means that the OPEX per vehicle is reducing each time too. So for 2022, we have OPEX coming in at $7.2 billion, with 1.31 million vehicles delivered, which is about 5,500 of OPEX per vehicle. If OPEX remained the same for 2023, and we hit 2 million vehicles, then the OPEX per vehicle reduces to 3,600. Okay, perhaps it might increase somewhat, but even if OPEX was $8 billion for the year, we're still down to $4,000 per vehicle, a reduction of $1,500 per vehicle, additional operating profit. Except, of course, now we have 2 million vehicles instead of 1.3 million vehicles. Anyway, this is the operating leverage that Tesla has, and as they continue to ramp, the leverage increases with it. Hence why 2 million deliveries for the year is such a big deal, as when we start getting up into the multiple millions, then the OPEX per vehicle starts to really diminish. Alright then, but Elon says 2 million vehicles for 2023. He actually said produced, and that there would be enough demand for them too. Now, I estimate that the current capacities of all factories are around 250,000 a quarter for Shanghai, and 150,000 for Fremont, or around 1.6 million annualized. Therefore, to reach 2 million production for the year, we need an additional 400,000 from the new factories. If they are at a run rate of 3,500 vehicles a week currently, then that's 360,000 a year just from them. If we add that onto 1.6 million, then we're at 1.96 million. So Elon talking about guidance of 1.8 million is less than the current run rates. Now, as far as the US is concerned, we actually know what the cell situation is there. We no longer have the long-range Model 3 with 2170 cells, so it's only the Model Y long-range. There is 35 gigawatt hours a year of 2170 cells coming out of Giga Nevada. Sure, some of them were used for the 20 or so working prototypes for the semi-truck, but I don't believe many more will be allocated to the semi-truck. There are around 250,000 Model Ys a year coming out of Fremont, which will consume around 20 gigawatt hours of the 2170 cells, leaving 15 gigawatt hours of 2170 cells that can be used in Giga Texas. That would equate to around 180,000 Model Ys a year from Giga Texas, or wouldn't you know it, 3,500 a week. However, we also now know that the 4680 progress is able to produce a further 1,000 Model Ys a week too, which would mean an additional 50,000 a year, or taking our 1.96 million to 2.01 million for the year. That is pretty much the total cell capacity we have currently. The same applies for Berlin. Tesla currently get around 15 to 20 gigawatt hours a year from LG for 2170 cells, which now mainly goes to Berlin, and very few in Shanghai. Again, about the same run rate in Berlin as Texas, due to the cells available. But now we're hearing that Berlin is closing down for production ramp, but I just don't know where the cells will come from. 2170 cells do require massive capital expenditure to increase production. It takes a long time. The only option I would see is potentially BYD's Blade batteries, which have been rumoured. If Berlin can make rear-wheel drive versions of the Model Y, this would reduce the cost significantly, as it saves in tariffs and shipping costs. So it'll be interesting to see how that factory manifests. There is, of course, the chance that the Model 3 lines may be down for a bit of time this year, with the upgrades of the Model 3 Highland, which could be big, or it could just be a minor facelift. It could be structural battery packs and front and rear castings. Although, if that was the case, I would have thought we might have seen some new gigapresses. Although they could use the same ones as the Model Y possibly, as the mould can be altered easily enough apparently. But there are some definite cost-saving exercises potentially for the Model 3, which might make sense as the price has come down. It would be good to increase margins again. But this is one of the major highlights for the year. One other theory I had for the Model 3 Highland is that if it is a really major update, then there's a chance that they could be using CATL's new Qilin structural battery pack with their M3P cells. This would mean the Model 3 would have more range and performance, or a smaller battery with similar range, yet simply a lower cost. This is highly speculative, but you never know what surprises Tesla might throw at us. I think Tesla's Shanghai factories are pretty much at full capacity now, so I wouldn't expect any more line upgrades there, and any additional LFP cells they get will likely just go into energy now. So that pretty much leaves the only increased cell supply for Tesla is going to be coming from the 4680s most likely. The last we heard, the pilot line at Cato Road is at 40% capacity, at around 4 gigawatt hours a year out of the potential 10 gigawatt hours a year capacity. But the one to watch now is the new line that is running in Texas. Texas has 4 4680 lines, each with a capacity of 25 gigawatt hours a year. The first one is finally running, and if that can hit a run rate of 40% capacity too, then we're at a further 10 gigawatt hours a year, or 140,000 Model Ys. Obviously, I'll be keeping my eye on these 4680 lines as they're kind of a big deal. And people are talking about potentially 2.5 million units next year, which would only be about 25% increase in growth, so it may be much higher. But I think the only way to see any growth in vehicle sales next year is from Berlin and Texas, as we have no other factories that can ramp up to these levels. And the way that will happen will be from the increase in 4680 production. These factories are barely even at 1/4 of their potential capacity, or possibly even 1/8 if you think they might be as efficient as Giga Shanghai. This is where all the growth is coming, and I think that might be it for the Model 3 and Model Y factories. Luckily in Texas, we also have another factory for another vehicle called the Cybertruck. Although I'm only expecting thousands to be made this year, it will not add to any significant amount for 2023. Next year, Elon says it will hit volume production, so part of that growth will hopefully be the Cybertruck. But again, that entirely comes down to the 4680 ramp. Not just the number of cells they're producing, but the energy density. We're hoping the cells produced at the pilot line in Cato Road was only producing the easiest chemistry they could, i.e. still using cobalt and no silicon in the anode. And that when they start ramping up the Texas 4680 line, we'll see some upgrades in energy density there. Or else the current energy density is likely only suitable for a single motor Cybertruck at this stage. I know it's all exciting, but something I often need to remind myself is that this takes time, a lot of time. You can call it a tech company all you want, but it's still a company that manufactures the most capital-intensive consumer product, and it takes a long time to set up these factories and make them efficient enough to make the product. Not only that, they are all new processes and unproven technologies that need to be refined and tested. Elon will often tell us when he thinks these will occur, but it's usually years away from his estimates. It requires patience. Things are happening, but it's a slow game. You need to look at the long term, years and years, not quarters and quarters. Because once any of them are achieved, then it probably will be the most valuable company in the world. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.